Good morning, friends and fellow traders. This is Doug Campbell with Right Way Options, and this is the morning market preparation video for August 15th, 2018. So, my goodness, this week has been marked by intraday whipsaws, overnight reversals, and that looks to be the course of action for this morning. Looking at the market first, we had this really nice move up yesterday, and if we look at the SPY, we reversed and started back up, and things started to look a little bit better. And now this morning we get a full-on market gap down at the open. At least at this point, as I record this video, we're down more than 150 points in a gap down this morning, completely reversing yesterday's little bit of bullishness. So if you're finding yourself being trapped into these things as this market flops around like a fish on the dock, we have to recognize that pattern. We have to recognize that we're fighting a market that we have no business fighting, and we're not big enough to fight it, and all we're going to do is give up our money. And when this is going on, if you're finding that your account's being chopped up, that you're losing money substantially, it's time to stop trading. It's time to back up, watch the market, be really, really careful to wait for your edge to return. The market will pick a direction eventually. The problem that used to happen to me when I was younger as a trader is I would continue to fight in this kind of market, thinking that every day I had to be trading, that every day was, if I was going to be successful, I had to have money at risk every single day. And that couldn't be farther from the truth. As a matter of fact, what we want to do as traders is we want to trade when we have an edge. When we feel that there is no edge, when the market is flipping around like this, it's far better to just stand aside and protect your capital, protect your confidence. Traders that fight this may not have the capital or the confidence to come back and trade when the market returns to good trading, and it will. It always will. I know I would go through periods just extremely frustrated fighting the market, giving all of my profits back and usually some of my capital in a market like this, rather than recognizing it was time to slow down your trading activity, to pull back, to maybe stand aside even, and wait for better days to return, because they will. And if you preserve your capital, you'll have a better chance of surviving long term in the market and making a career out of it. I've been lucky to have survived 13 years as a full-time trader, and I can tell you I do not trade every day, and as a matter of fact, I do not try to trade every day, because I know not every day is a good day to trade. So keep that in mind. Always remember, cash is a position, and it's oftentimes the best position you can be in, particularly in a market like this. So think about that as you plan your day forward. Looking at the market here, if we take a look, we're below this resistance point, and we're just chopping in this ugly manner right now, flipping overnight intraday reversals. And you can see our support level would be down here. So a push down into this level could provide us an opportunity to catch a bounce here. But so far, we're just kind of hanging here in mid-air. That makes it really dangerous and really leaves us subject to an awful lot of chop in the market. So we need to make that transition either back up to test resistance or that move down here to test support. And then maybe we'll start to get some clarity in price action. But until that occurs, be really careful here. Let's take a look at the SPY. Also chopping around considerably, just ugly price action. And on Tuesday, we rallied back up here to test our trend line that I have drawn, and you may draw that differently. That's perfectly fine. Here's our resistance high that we've been unable to breach in there. And now Wednesday, as you can see, we're looking to gap down this morning and wipe out all of yesterday and be down here toward the lows of Monday, which pretty darn frustrating for sure and for certain. So everyone, just be a little bit careful how you approach this day. Let's take a look at the Qs. Now the Qs have held up substantially better, but they're still showing that kind of whip around that's going on. And now this morning, we're going to gap below all of that area at the open, it looks like. And we could see a test of trend or possibly even support. So we'll have to watch that closely. But even though it's held up a lot stronger than the other indexes, we are seeing signs of trouble this morning. Let's take a look at IWM. IWM, big strong day yesterday, picking up here, just looking like the bulls had the world by the tail here in the Russell. Everything was going to come, come through for a full-on breakout. And now this morning we're gapping down, holding intraday of yesterday's candle, but certainly participating in the move down. And we'll have to wait and see if we get follow through to that. And that is a critical thing. Follow through. So far this week, we have had no follow through to a candle, zero follow through to even a single candle. We're whipping back and forth. So keep that in mind. Let's take a look at the VIX. That VIX has also been giving us some fits here. Bouncing, if I'm going to take this clear out here to a longer term, this long-term downtrend that was going on in the VIX, we smashed through that in February with that fear coming into the market, have moved that all the way back down into this area. We bounced directly off of that trend line. Amazing, isn't it? How that works. Bounced off that trend line, rallied up sharply, and then yesterday we did get a pullback. But this morning's gap down is likely going to spike us back up. And we could easily come up here and test this level of resistance. The question is whether or not we would break out of that. If we break out of this and the market really starts to fail, we could quickly escalate into some selling. So watch that closely. We don't want to see that resistance break. We want to see that resistance hold and keep that VIX down here. Because as we all know, VIX fear can really come in quickly in the market and cause some considerable problems in our charts. Let's take a look at T21 22, which is the 4-week new high, new low ratio. And you can see yesterday, here we are once again. We've climbed all the way back up. We were heading down toward this reversal zone down here, and it looked like there might be an opportunity that we could get down here to this reversal zone and come up. But no, yesterday we decided to climb all the way back up, right up to this downtrend in T2122. So that downtrend is giving us all kinds of fits here. Now we're going to gap lower and probably be pushing back down into this range. Very frustrating price action. So right now we're not getting any really good clues of a direction or anything with T2122. What it's really showing us is just extreme chop and very difficult price action to trade. Let's take a look at our economic calendar today. Economic calendar is a full one, and there's a lot of data that could change or move the market around today. So let's take a look right here. As you can see, we have retail sales right here at 8:30 a.m. Now we're expecting retail sales to show a little bit of a decline in growth today. So watch that close, kind of slipping just a little tiny bit, nothing major. I wouldn't expect any kind of terrible price action as a result of that, but certainly a market moving event, particularly if there's a surprise. Empire State Manufacturing and productivity and costs, everything is looking to stay pretty stable in these things. We have industrial production at 915, business inventories, housing market, the petroleum status report, and the Treasury international capital today. So I mean, just a calendar full of market moving events. So you'll want to pay attention to that for the day. Let's take a look on the earnings calendar. Earnings calendar, we had only, we didn't have that many companies reporting earnings today, but what's happening in those earnings is that in those earnings reports is that we do have some big names to think about. Macy's is reporting this morning. It looks like they have reported well, very well, moving up this morning. And we have Cisco reporting this afternoon after the close, and also a NetApp will be reporting after the close, so you'll want to watch those at the end of the day. Earnings season is beginning to wind down. It's starting to slow down a little bit, but that doesn't remove our responsibility for taking a look and checking on those earnings reports when companies are going to report. We have another big retailer reporting tomorrow, WMT. So retail's kind of been the theme here lately, and Walmart will be reporting tomorrow. So lots of reports going around, floating around here in the market still, and pretty big names still to come. So watch those earnings reports carefully. So with that, everyone, I want to wish you all a fantastic day. I know this has been a frustrating market, and I think it's likely to continue for a period of time. But with that frustration, if we stand aside, if we protect our capital, we can just wait, be patient for the next good signals to start showing up in the market where we have an edge. With that, everyone, take care, have an awesome day. And if this is the first time you've seen these videos, please do me a favor, click that subscribe button on YouTube, the follow me button on Facebook. Click those thumbs up buttons and drop a comment. I really do appreciate it. And always feel free to share this video with any friends and family. Everyone, have an awesome day. I will meet you right back here bright and early Thursday morning. Take care now.